Hey everyone, Gary Jain here. Welcome back to the Ledger Labs podcast. I'm going to start this one a little differently than usual because I had a conversation last week that I can't stop thinking about. I was on a call with a CPA I've known for probably 15 years. Great guy, built a solid practice, about 12 people on his team. And he asked me a question that it hit me. He said, Gary, am I training my replacement? Because these AI tools you keep talking about, they are doing what my junior staff does. And if that's true, what am I supposed to tell them? That's the conversation we're having today. Not the shiny AI is amazing pitch you've probably heard 100 times, but the real, uncomfortable, honest conversation about what's actually happening in small business accounting right now. With me today is John Tenney. John spent 15 years as a practicing CPA before he jumped into the AI world. And now he helps accounting firms and small businesses figure out how to navigate this transformation without losing their minds or their jobs. John, thanks for being here, man.
Thanks for having me, Gary. And yeah, that story you just told, I've had that conversation probably 20 times in the last 6 months. And it's never easy because the answer isn't simple, but it's also not hopeless. So I'm glad we're doing this.
All right, let's not dance around it. What is happening to the accounting profession right now?
Look, I'm not going to sugarcoat this. The bottom layer of accounting work, the data entry, the transaction categorization, the basic reconciliations, that work is being automated at a pace that would have seemed impossible 5 years ago. Not eventually, not in the future, now.
Right now.
Right now. And that's scary for a lot of people, especially junior accountants and bookkeepers who were hired specifically to do that work. But here's the thing that nobody's talking about honestly enough. That work was never the valuable part. It was the necessary part, the barrier to entry, the thing you had to do to get to the good stuff.
Okay, but for a lot of people, that necessary part is their entire job description. So when you say it's being automated, what does that actually mean for them?
It means their job description is changing whether they like it or not. And they have two choices. They can either evolve with it, move up the value chain, learn to work with AI, become the person who interprets what the AI produces, or they can fight it and watch themselves become increasingly irrelevant. And Gary, I've seen both. I've seen bookkeepers who embraced AI and turned themselves into financial analysts. And I've seen people who refuse to adapt and, well, they're not in the profession anymore.
Yeah. Let me ask you this, because I think this is what everyone's really afraid of. Is AI coming for the entire accounting profession or just parts of it?
That's the question, right? And the answer is both, kind of. Let me explain. AI is phenomenal at tasks that are rule-based, repetitive, and high volume. Think about what that means in accounting. Bank reconciliations, AI crushes that. Categorizing expenses, AI learns your patterns in like 2 weeks and then never forgets. Receipt matching, done in seconds. Even basic tax prep, the data gathering, the form filling, AI can handle most of that.
So that's like 60% of what a traditional bookkeeping role does.
Yeah, probably more. But here's where it gets interesting. AI is absolutely terrible at the stuff that actually matters to clients.
Like what?
Like judgment, context, strategy. Let me give you an example. AI can tell you that your cash flow dropped 15% this quarter. Great, but it can't tell you why. It doesn't know that you hired 2 new people, that your biggest client delayed payment, that you invested in new equipment. It just sees numbers going down. And it definitely can't tell you whether you should panic, adjust your hiring plan, tap your line of credit, or just wait it out. That requires human judgment, experience, understanding the business owner's risk tolerance, their goals, their personality.
So you're saying the robots aren't taking over completely?
Not even close. But they are taking over the boring stuff. And honestly, that's a gift. Because now accountants can spend their time on the work that actually builds relationships and drives value.
Okay, but let's talk about the small business owner for a second. Because if you're running a $2 million restaurant or retail shop, and you're already paying a bookkeeper $3,000 a month, Are you thinking, great, now I can pay them to do higher value work? Or are you thinking, great, now I can fire them and just use the software?
Yeah, that's the brutal question. And the truth is, some business owners are thinking that. But here's what they don't realize. AI without human oversight is a disaster waiting to happen.
How so?
Because AI makes mistakes. It hallucinates. It misclassifies things. It doesn't understand context or nuance. I had a client last year, e-commerce business, about $4 million in revenue. They tried to go fully automated. No bookkeeper, just AI tools. Within 3 months, they'd miscategorized $80,000 in expenses. Their tax estimates were completely wrong, and they almost got audited because the AI flagged a bunch of transactions as personal that were actually business.
Wow.
Yeah. They brought in a human bookkeeper who understood AI, fixed everything in about 2 weeks, and now they're running a hybrid model. AI does the grunt work, human reviews and interprets. That's the future. Not AI or humans, it's AI and humans.
So if you're listening right now, whether you're a small business owner wondering if you still need an accountant, or you're an accountant wondering if you still have a job, the answer is yes. But the job is changing. And we need to talk about what that actually looks like. All right, John, let's get tactical. Break this down for me. What can AI actually do well in accounting right now? Like what's at 90% automation versus what's still mostly human?
Okay, I love this question because this is where the rubber meets the road. Let me break it into 3 tiers. Tier 1, 90% automated. This is the stuff that AI absolutely dominates. Bank reconciliations, transaction categorization, receipt scanning and matching, duplicate detection, basic payroll processing. If your bookkeeper is spending more than like an hour a week on these tasks, you're doing it wrong. The tech exists, it's affordable, and it works.
And when you say affordable, what are we talking about?
For a small business doing under $5 million in revenue, you're looking at somewhere between $50 and $300 a month, depending on complexity. Compare that to paying a bookkeeper 20 to 30 hours a month at $50 an hour. The math is pretty clear.
Okay, so tier 1 is the no-brainer automation. What's tier 2?
Tier 2, 50% automated. This is where it gets interesting. Think financial reporting, cash flow forecasting, variance analysis, accounts payable and receivable management. AI can generate these reports, but humans need to interpret them, spot anomalies, and explain what they mean. So for example, AI can create a cash flow forecast showing you'll be short 15 grand in 2 months. Great. But a human needs to look at that and say, okay, this is because we have 2 big client payments coming in Q4. So we should either delay this expense, tap our line of credit, or run a promotion to accelerate some sales.
Right, because the AI doesn't know your business strategy.
Exactly. It's like having a really smart assistant who can crunch numbers but has zero business sense. You still need the adult in the room.
And tier 3?
Tier 3, 10% automated. This is where humans still dominate. Tax strategy, financial advisory, business planning, audit preparation, client communication, dispute resolution. Anything that requires judgment, negotiation, or explaining complex concepts to non-financial people. AI can assist here. It can pull data, run scenarios, suggest options, but it can't replace the human making the call.
So give me an example of tier 3 in action.
All right. I've got a CPA client, let's call her Maria, who runs a practice focused on Main Street businesses, restaurants, retail shops, service providers. Last year, she started using AI to automate all the tier 1 stuff. Reconciliations, categorization, all of it. That freed up about 15 hours a week for her team.
15 hours a week?
Yep. And here's what she did with that time. She started offering quarterly business reviews to all her clients, sitting down with them, walking through their numbers, helping them understand trends, identifying opportunities. She helped one restaurant owner realize they were losing money on their lunch menu, but printing cash on their catering business. So they pivoted, doubled down on catering, and revenue went up 30%.
That's incredible.
Right? And here's the kicker. She raised her prices. Because she wasn't selling bookkeeping anymore, she was selling strategic advisory. Her clients were happy to pay more because the value was obvious. And her team? They went from being data entry clerks to financial advisors. Everyone won.
Okay, but let me play devil's advocate for a second. That story is great for an existing CPA with an established client base and a team. What about the solo bookkeeper who's been doing this for 20 years and doesn't have those resources? Or the small business owner who's thinking, I can't afford Maria's new prices, maybe I'll just use the AI myself.
Yeah. That's the hard part. Look, I'm not gonna lie to you. Some people are gonna get squeezed out. If your entire value proposition is, I enter data into QuickBooks and you're not willing to evolve, you're in trouble. But here's the thing. The opportunity is massive if you're willing to adapt. Because small businesses don't just need cheaper bookkeeping, they need someone who understands their business, who can translate financial data into actionable decisions, who can coach them through tough spots. AI can't do that. It never will.
So the message to accountants is, don't compete with AI on data entry. Compete on insight, judgment, and relationships.
Exactly. And the message to small business owners is, don't try to go it alone with AI. You'll save money in the short term and lose a fortune in mistakes, missed opportunities, and stress. Find an accountant who uses AI, who embraces it, but who's still there to guide you. That's the sweet spot.
All right, so if you're listening right now and you're thinking, okay, I get it, I need to embrace this, but where the hell do I even start? We're going to talk about that. But first, John, I got to ask, what about the fear? I'm 55 years old, I've been doing this for 30 years, I don't understand technology fear. How do you address that?
Man, I hear that all the time. And I get it. I really do. But here's what I tell people. You don't need to become a software engineer. You don't need to understand how the AI works under the hood. You just need to be willing to use it. And most of these tools are shockingly user-friendly. Think about it this way. 30 years ago, you didn't need to understand how a calculator worked. You just needed to know that 2 + 2 = 4 and trust the calculator to do it. AI is the same. You don't need to understand machine learning. You just need to understand what the tool does, how to review its output, and when to override it.
So it's more about mindset than technical skill.
100%. The accountants who are thriving right now aren't the most tech savvy. They're the most willing to learn. And honestly, if you've made it 30 years in accounting, you've survived like 5 technology shifts already. This is just the next one.
Fair point. All right, let's make this practical. John, if you're a small business owner listening right now, let's say you're doing $1 million or $2 million in revenue, what's the first step you should take?
First step, audit your current accounting process. How much time are you or your bookkeeper spending on manual tasks? Data entry, reconciliations, receipt matching? Write it down, track it for 2 weeks. Because you can't improve what you don't measure.
And once you have that number,
then you calculate the ROI of automation. If you're spending 20 hours a month on manual bookkeeping at $50 an hour, that's 12 grand a year. If an AI tool costs $200 a month, $2,400 a year, and cuts that time in half, you've saved about $9,000. The math makes itself.
And what about picking the right tool? Because there are like 100 options now.
Yeah, it's overwhelming. Here's my advice. Start with the platforms you already use. If you're on QuickBooks, look at their AI features first. If you're on Xero, same thing. Don't try to reinvent your entire stack. Just add AI capabilities to what you're already comfortable with. And then, once you've automated the basics, that's when you think about adding more sophisticated tools. Forecasting, scenario planning, dashboards. But crawl before you run.
Okay, now flip the script. If you're an accountant or bookkeeper listening, what's your first step?
First, accept that this is happening. Don't fight it, don't ignore it, don't hope it goes away. Because it's not. Second, pick one AI tool and learn it deeply. Not 10 tools, 1. Get really good at using it, understanding its strengths and limitations, teaching your clients about it.
And what happens when you do that?
You become the expert. Your clients start coming to you saying, I heard about AI accounting, I don't understand it. Can you help? And suddenly you're not just their bookkeeper, you're their technology advisor. That's value. That's differentiation. That's how you charge more and work less.
I love that framing. All right, last question before we wrap. What does the accounting profession look like 5 years from now?
Man, that's a big one. Here's what I think. In 5 years, the bottom layer of accounting work, the purely mechanical stuff, will be almost entirely automated. Junior bookkeeper roles, as we know them today, will be rare. Instead, you'll have AI accounting coordinators or workflow managers who oversee automation. But the top layer, the strategic advisory, the tax planning, the CFO-level guidance, that will be more valuable than ever. Because as AI makes financial data faster and cheaper, business owners will have more questions, not fewer. What does this mean? What should I do? How do I make sense of all this?
So the human element becomes more important, not less.
Exactly. The accountants who embrace AI and position themselves as interpreters, strategists, and trusted advisors, they're going to thrive. The ones who cling to data entry as their value prop, they're going to struggle.
I think that's actually a hopeful message. Because it means the profession isn't going away, it's just elevating.
That's exactly it. This is the best time to be in accounting if you're willing to evolve, because the boring work is going away and the interesting work is expanding. It's honestly exciting.
All right, John, this has been fantastic. I think we've given people a lot to think about and hopefully a lot to act on.
Absolutely. Thanks for having me, Gary. This was fun.
All right, everyone, here's what I want you to take away from this. AI is not the enemy. It's not here to destroy accounting. It's here to handle the stuff nobody enjoyed doing anyway. But it's also not a silver bullet. You can't just plug in software and walk away. The future belongs to the people who can bridge both worlds. Business owners who use AI but still value human expertise. Accountants who embrace technology but lead with judgment and relationships. That's the sweet spot. If you're feeling anxious about all this, that's normal. But don't let the anxiety paralyze you. Start small. Pick one thing to automate. Learn one new tool. Have one conversation with someone who's ahead of you on this journey. Because the only way to fall behind is to stand still. Thanks for listening. If this resonated, share it with someone who needs to hear it. And if you want to dig deeper into this stuff, head over to theledgerlabs.com. We've got resources, guides, and we're always happy to talk. Until next time, keep building, keep adapting, and remember, the future of accounting isn't about technology. It's about the people who know how to wield it. See you next week. All right, John, this has been fantastic. I think we've given people a lot to think about and hopefully a lot to act on.